Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So I'm going to talk a little about brokers this weekend in the beginning here. Let me just run through real quick, though, for those that may not have the time, the Forex Factory calendar coming up next week, which hopefully is what is showing on the screen. Let's double check that. There we go. So Forex Factory, remember, always change the date forward. Don't make the mistake that I occasionally make. February 28th to March 6th is what we're looking at. So for those of you, the last day of the month is tomorrow. March 1st is Monday, number 1. And hopefully it is a great last month to Q1 of the quarter. No, it's been a quite disruptive to those trading the British pound pairs. We're going to talk a little about that this morning. So just know this is the calendar coming up. So Monday, ISM, which is a US based, you can always check the red folder events. Keep in mind, I do filter out these just using the filter function. I don't care about orange or yellow. Feel free to look at them if you wish to put more information in your brain. But I choose to, with Forex and a lot of the other trading that I do, really just want to focus on the stuff that's most important to making risk management based decisions. And primarily that is, can I actually afford to lose the capital that I am about to trade if it is real money? If not, please start on demo. And hell, I don't care if you got to spend a year on demo. Yes, it will cost you, but it will be a fantastic learning. Just think all the money going to a university costs. So just look at it from that perspective. That helps you because you certainly can make a heck of a lot more money trading than you can at most jobs. So with that being said, US dollar March 1st, 7 a.m. Note that those trading Aussie, which has been on an absolute tear recently. Bank of Australia's got a rate statement. That's definitely a big issue. I know that pausing for red folder events has been sort of back in the limelight because different softwares will have a tendency to trade through these events. You want to be clearly aware of whether or not that affects your software. But a lot of events going on Monday, Tuesday related to the Aussie. Annual budget, GDP, not really as much of a big deal. But again, anybody trading those NZD pairs, want to make sure you're listening to what Governor Orr has to say. He's a good guy. He knows his stuff, but it doesn't mean he can't go off script. Okay. Thursday, OPEC. Anybody trading oil? Be aware. Fairman, that's good. I like that. We should call it Fairman Powell. That's great. Fairman Powell speaks on Thursday. Okay. Now, he spoke last week and kind of riled up markets a little bit, but, he's continuing to signal the quantitative easing that the Fed has really just, been on that particular roller coaster up, if you will, since basically 2008. So we're coming up on 12 years of a quantitative easing type of thing. And I think that honestly, it really is an issue with the Fed of at some point the debt that this country and many others are taking on. I mean, it really is going to have to be trying to chip away at the debt, and that is going to involve not the kind of stimulus, but almost taking money off the table, which is the polar opposite of quantitative easing. So at some point that may have to happen depending upon the inflation. Although you'd think that with all the speak of inflation, that metals, which typically rise, if there's potential inflationary expectations, would be on the rise, and they've actually been in a sell-off. Gold actually cracked a pretty good support level. I think they're just shaking out the weak longs, quite frankly. But if the dollar continues its path down, gold certainly has the potential to pop back up. So All right, Friday, non-farm payrolls. This is the big one. You want to be aware of this one. NFP essentially is just the unemployment rate. It's one of the largest globally released news pieces that, quite frankly, I rarely, if ever, trade in front of. So that is that. One thing I do want to note, unrelated, but I have seen a lot of Bitcoin chat. If you guys do not know who Michael Berry is, I want you to Google him. Okay, if you've seen the movie The Big Short, Michael Berry, who a lot think he's nuts, I don't, but essentially Michael Berry here, talking a little bit about the fads of today. Michael Berry is probably one of the smartest hedge fund guys on this planet. He was the first person among maybe about 3 or 4 people that found all the problems in those mortgage-backed tranches that led essentially to a lot of the rating agencies who have falsely stamped these mortgage tranche pools with AAA ratings. He was one of the first to find that there was fraud in that, which led to a crisis, obviously, in credit default swaps. And if I'm boring you, this was the core of the 2007 into 2008 financial crisis, is that many of these trades on the wrong side of the trade, being AIG and Goldman being on the right side of the trade, had to be bailed out by the Treasury, along with a whole bunch of other banks that went bust, including Bear Stearns and Lehman Brothers. So there's a lot to be learned from that. He was one of the first that signaled this, and nobody listened to him in the beginning. So love or hate the guy's bananasness with his tweets, I do listen to his information. I do put it in stone. Okay. So just know that he thinks that a lot of things are in speculative bubbles, just like fiber, as some of you may recall back in '99, with WorldCom and Enron's fraud, in addition to his concern about the levels of EV and Bitcoin. So just a side note on risk. Take a look at the charts. S&P, a little bit of a pullback. I just want to show this because I always love, and this is really kind of not the best example, but here's a hammer reversal right here. Now it did finish doji-like. Anytime there's a sell-off and you come down to an important level, in this case, this is the 50 SMA, and you bounce off it significantly with some volume. Remember, I carry, I put a lot more credence in volume I can see on indexes than I can on Forex, right? So any type of volume I can see, I know and I trust those volume numbers, and it's on a higher bounce or a higher than average volume, as you can see here. Typically, it'll tell you the next day is going to be a big one. Okay, and we had a huge up into this. Really not related to the S&P, just a candle pattern I always like to point out. Start off with the dollar. So we've been in a downtrend for, seems like forever, but since March of last year, we've clocked almost a full 13 bucks in movement down on the dollar. And we have been in this period for this whole year, a very tight range of essentially 2 bucks, bouncing in and out of this range. Came back off the bottom and had, remember what I said on alert for these doji candles, came back up above it, pushed above it. I think a lot of other currencies were affected last week because the British pound was mostly in the news for the moves I'm about to show, but maybe a good example of not necessarily a week where the dollar's movement led everything else, right? Last week was all about the pound potentially being the dog, right? And the rest of the currency markets being the tail, or at least the ones that were pin action related to the dollar. So let's just take a quick peek at USD. I'm not going to spend too much time here. I've spent a lot of time here, but we're bouncing between these levels. Everybody's always like, oh, Steve, what are you thinking about? I'm like, look, my forecasting is it could mount to be a pile of crap long term, right? So all you can do is what you think you have in front of you in terms of chart patterns. Take it with a grain of salt. I do think that we're going to be shaking out the shorts in the dollar and that we could see 91.50. I could be wrong. We could go back down and burst through the bottom, which ultimately I think is going to happen at some point, especially if some of these stimulus programs that the idiots in Washington are talking about come to fruition on both sides. Okay. So That is the dollar. So US, seeing some strength. Everything's pulling back with the exception of. Okay, so the example of the GU last week, British pound versus the dollar. Let's move to a weekly chart where I kind of showed this a little bit. So the reason you'll always start off with daily charts and then move to a weekly is very simply, I was expecting, and let me just draw. I'm actually not going to get caught up in lines here, but you just see my dotted line rolling across the top of the screen here. Essentially what this area is a resistance level. Talk a lot about this. A lot of times if there's nothing in the way of a big level, either up or down based on the chart, above or below, a lot of times if this has been one of the markets where you think there's a lot of people short, and this could be a chart pattern of anything. This could be a chart pattern of, Dell Computer, right? And we could see that there is some probably big pockets up here of stops, like essentially we got above this area. So what did the market do? It zippered all the way up to that point and then reversed, right? This is a clear rejection of this area. So what does that mean? It means that we could go back up and visit it again, right? Highly likely. More than likely, and the other problem is I don't have this overlaid on market profile from a volume perspective, but there could be some gaps, what they call sort of skip trades through many of these different, and you'd have to drop back to the 5-minute chart to see if there was any sort of missing notches in this tear up. But oftentimes, if there's missing notches in trade volume, or I like to just call them pockets, we'll go back down in just a normal auctioning process of any instruments trading. We'll just have probably a much higher chance that we're going to go back and visit that again. Let me just jump back to the daily here. You really have to spend some time on the weekly chart with the pound to see this. And this is going to be the first place you start, in my opinion, before you look at anything else that's GBP related, right? Swiss, anything, Euro, JPY, you want to start to look here first for some clues. And who knows, maybe I'm wrong. Maybe clues are coming out from the other currencies first. The only point of showing you this, and the only reason any of this matters, honestly, is that if you're accepting trades and we break out from this level and we're headed higher up into potentially a big reversal or so this is necessarily a hammer reversal, but this was a clear rejection of the higher level. You just don't want to be accepting on that first break. You just don't want to be accepting a lot of shorts, in my opinion. And this is where a lot of the cost averaging software just kept thinking, all right, well, we're getting really, really expanded out in the rubber band, right? We're getting sort of multi deviations out from a normal trading pattern. It's going to want to snap back. And that's really the purpose of any type of cost averaging software. It's putting heavy successively or sequentially larger trades in the mix because it knows it's going to snap back. Problem is if your account is not set up correctly, your account's just not going to have the ability to withstand this type of movement, right? And that's why it's critical to have the right trade size on it. All of our developers, whether they started off with that talking or not, have very conservative settings on their accounts. But once the win rates of some of these currency pairs start to wane, it becomes important to listen to their calls each week because they're going to be changing the pairs. So Dasan actually paused all his GBP pairs halfway through the month because of some of the stuff we're seeing going on. And I'm pretty sure, albeit I haven't listened to every ounce of his last number of calls the last few weeks, that he brought that up. Now, whether people are paying attention to that or you're up and down anywhere, I don't know. We did have some comments last week of people getting squeezed hard and some drawdown on this because of the fact they weren't doing what we're talking about, right? And I get it. People have lives, they got things to do and families and this whole pandemic shit. I mean, but at the same time, it has to, you got to put your risk management first. And, it's the same thing that goes with putting, any type of trades in place. So that's all I'm going to say on GBP. Let's take a look at the GBP Euro. So same thing with the EB here. You've got, essentially broke out. This is all related, obviously, the weakness in the euro because of the strength in the pound, obviously. Would have expected this to break below this. And this is the point where once this broke and we're moving in below this area, and I almost wish these lines could show up on like a 5-minute or a 4-hour chart that I could drop down and show you, but they're not. But once we crack through this, and that knowledge, if I was accepting trades, I wouldn't have taken longs underneath this point. Now that we're back above it, but arguably right on that line, it makes it really tricky as far as accepting any trades. I personally, because of the movements were so extreme, I don't know that I'd be trading GBP pairs. I don't know what Desan said yesterday in the call, right? He does the same kind of analysis that Tyler and I do, and they make their calls just based upon that. But I just haven't liked what I've seen. So in all my accounts, I haven't been trading any GBP pairs for some time. And it's been a lot longer than just half of this month. I really haven't had any of these pairs in any of my trading accounts for probably about 6 months. Most of it is just probably my own ignorance on not wanting to wake up one morning and have some crazy talk coming on Brexit that winds up blowing up a couple of accounts of mine because of the fact I have these trades. So it certainly argues for, if you're using variable, to understand how the trending settings work. And I know that Desan was slightly out of pocket last week, and that was because he was finishing up a lot of videos that he's been releasing. So one thing before I forget about that, I'm going to show you this, drag this window over. So this is the this is the new variable trader chat room. Okay. So if you do not have access to this, let us know. We can post the link to the Telegram channel, which is a big, massive page we've built in the Zendesk part of the help desk in the back of the AP Academy. I could post a link if you guys need to see this. I do appreciate that this group's really put a lot of positive stuff, even though it's a brand new chat room. Okay. One thing I will encourage you guys to spread the word on is, because I'm sort of half-assed adminning this. Make the questions, sharp and to the point. Please don't post a lot of crazy ass videos, because nobody gives a shit. Just post stuff in here that is all related to just trading. Okay, let's just do that. Let's keep it like super professional. Just pretend like the SEC's looking in on this room, as I always tell people. And they're just looking in. But I think this could be a great addition. Do not, with either this room or any of the other chat rooms, especially the Arrow chat room, which is very popular, do not use this as a place to not, sort of like post a problem and not post it in the ticketing section, right? Because I don't know who's looking at it, whether I'm looking at it. I mean, there could be days that go by where Desan and I just don't view the room, right? And even though I have nowhere near the expertise he has on variable, most questions that come in this room are probably going to be related to Desan, but many of these questions can be a basis for him to use as sort of a data set, if you will, of things he can address on his next developer's call, right? And I would encourage all of the developers that may be watching me talk about this. I think this chat type of room is good, provided you set strict parameters on keep the goofball content out of the room, okay? So just a heads up on that. We will get you guys the Telegram link. Actually, let me just do it before I forget here. I think they've posted it back here. Let's find out. The social media channel. So this is our master Telegram list. I would, at the very least, which I'm willing to post right now, There you go. It's in the chat window. At the very least, I would. Doesn't look like the variable room's in here yet, huh? Maybe I'm wrong. We got, looks like they made some changes to this. I don't see the variable room link in here, guys. Somebody want to let our back office folks know about this so they can get it added in there? I mean, I see variable, but I don't see maybe I'm missing something. I love how this list has grown so big, man. It just goes to show you how the awesome dedication of the team. Anyway, I'll let you guys mess with that, and you guys can post it in the chat room for me. I'm just going to move on here. All right, so we got that for the one question that I did just get. Before I forget, this is a link to my Twitter account. You can see what it is if you want to follow me. Do keep in mind, I try to keep the content that I post on here mostly just related to trading and motivation and risk management. I don't really get into a lot of detail. I just don't have the ton of time to manage that in the course of a week. All right, so back to the charts. First question was, and good morning as well, thank you. Appreciate it. GBP CHF. Let's take a look at that since we're hot on here's the NZD before I get rid of it if you guys want to see. Let's go back to the daily first. Still in the range in NZD, GBP NZD. Let's look at CHF, which looks like they deleted. Why is it only posting futures? Let's try it all. There we go. Keep in mind a lot of this data for one of the other questions I got last week is mostly coming from FXCM, to one of the big FCMs around the world. So here's a more exacerbated look at what took place. This is a daily chart, by the way, okay? So this probably blew some accounts if you guys were cost averaging here just because of this move. But I mean, no surprise, talking a little bit the last few weeks is, look, we came flying up against this point on the daily. And then look at all these, look at the little teeny pullbacks. What this is doing right in here, this is sucking all the suckers into putting shorts right in here with stops right up in this pocket, right? And obviously there was a big bunch of stops because just look at the absolute blast off that took place out of this. I mean, you're talking thousands of pip moves here. So go back all the way to the weekly to probably see why it's zippered up into this area. See that? So literally it was clean sailing to the highest point. You know, if you look essentially left, you'll see what was a head and shoulders top and probably a slightly sloppy pattern at that. But I mean, it absolutely cracked when it cut through the neckline down along the bottom here. But so that meant that we had a pretty solid resistance point, which it's basically right here. We came up to it almost to the pip and then completely reversed. So this is tough because this is where a trending software and a martingale cost averaging or a basing type of software, you know, balancing between 2 points or rotating back and forth, as they call it, market profile land between 2 points. Neither is going to work in this case. So it's all about having go through risk management controls in place, like making sure you don't have ridiculous lot size trade. But that is, so the problem with this is more than likely we're going to go back up and visit this area again. When, how long, it's tough to call. When you've had these whack moves like this, it's almost impossible for me to forecast. Just knowing that not trading these pairs right now is probably your best plan. Move on to some other pairs. It's too much risk. Because what if I was dead wrong in everything I talked about, right? It's always, you know, it's always a possibility, right? Steve's not God in Forex. So sometimes I suck. Yeah. We all missed the Drudge Report. Steve, can you recommend a good news aggregator for financial news? The problem with a lot of this is, and I'll show you, here's the news feed for TradingView, and you really, let me go back and click on something that's more understandable. TradingView has an okay news feed. The best, in my opinion, is the problem is it's not cheap. But outside of that, maybe if somebody wants to post, and I probably won't post that. Briefing.com is one of the best. Okay. I'll show you who these guys are. So these guys have everything going on in here. You could try a whatever. They have, AP, Thomson Reuters, they have Bloomberg, they have all the other big news feeds. Those are the three biggest in the world coming in here, in addition to all the other feeds out there from like an FXCM, which is one of the biggest Forex brokers in the world, to a lot of the other data feeds from a news standpoint. But they aggregate most of this coming in. Probably something you want to be more in tune to being on if you actually traded something other than Forex. Like if you were a big arrow trader in Forex, or if you traded maybe equities in addition to maybe, futures, or you traded options or something like this, would sort of argue for the money that it costs. But essentially briefing.com. CAD CHF, let's take a look at that before we move on, since we're US dollar. Let's do the daily first. So you can see we've broken above on USD Swiss here. We've broken above a resistance line, headed now probably towards this 200 SMA. Would be my argument. Could even go as high as this and break through this. Probably is a big resistance area right here, at least as far as these two are concerned. There's a lot of other things that could absolutely swing this currency pair around. And, the big thing that could swing this around is GBP's relation to the Swiss first. This is one of those cases where you may, in the main currency pair here, have a pin action pair that's swinging it around. So that's why you want to look at it from a risk standpoint first. Let's take a look at CAD CHF since we're on the subject. So many currencies. 80 CAD. I think we should look at this one first. A lot of the strength across the board in the Australian market. My hat's off to these folks. They've been doing well, but we're back now inside the range because we had such a broad rip in a lot of the AUD stuff. A lot of people, I don't know if you saw my post on Twitter, but a lot of people were perplexed at that. And realistically, it was a big long-term fib area, and also what's called a 127 fib extension on a long-term chart that the Aussie went up and hit on a bunch of stuff, and absolutely bounced off it as a reversal. So and I don't talk a lot about Fibonacci's because I think in the short term they're all hooey, but they really have a much stronger hold in terms of additional areas of confluence that I talk about on a longer term chart, especially the golden number, which is 127. You can Google that if you're wondering what that is. All right, so we got that question answered. What are your thoughts on USD JPY? I think it's taking a back seat to some other currencies right now, but let's take a look at it. Daily chart. Now, notice we've broken on the daily. We'll go to the weekly in a second here, but notice we've broken above, came right up to the next point of resistance. But this is a good example of when you're in a downtrend, and I know maybe not the easiest to sort of conceptualize, but when you're in, maybe I could just draw it here. When you're in sort of a downtrend, price breaks up above the downtrend. Maybe it's easier to look at like this, XY axis like this, right? You're in a downtrend, price breaks above it, oftentimes will rip, blast some stops, come back down against the top of that trend channel and bounce again. Okay. So just note that's almost exactly what happened right in this area right here, bounced off the trend channel and continued higher. That knowledge will help you to either approve or not approve trades that you think are going to be in relation to that. So let's take a look at the weekly. Same thing, right? My sloppily drawn, I don't know, what do you call them, lime green trend lines. Once we broke against that line, and we came back down here at the bottom. I guess I should probably drag it down so you can see what I'm talking about, huh? Looks about right. Notice it bounced off that. That would have been my, and this is these weekly candles. That would have been my first indication to not want to accept any shorts at that point, because we probably headed higher, right? Not every day, because we had some pullbacks along the way, but essentially the next move is the next area or the next pocket of confluence. It's where the markets in almost all cases want to begin to auction up to that level or down to the level once you've broken out of a previous support or resistance or trend line. Hopefully that helps. I'm on Einstein for the last 2 months, 15% gain, no drawdown at the moment. That is good to see. All right. Next question. Hi, Steve. First thing first, your calls are my entry points in Forex investing. Thank you, Jan. Just understand I can always be wrong. Really grateful for them. Since a year, I'm very successful running Einstein in high volume settings on the ring. If you may recall, folks, back in the spring, myself, and Tyler, I give him most of the credit for putting together high volatility settings on Einstein and Alexander at the time, running a ring. So in that case, it was Euro USD, USD JPY, and then Euro JPY to finish the ring. My question concerns the concept of the ring. I see a disadvantage when one of the currencies starts trending for a couple of days or longer, which is very true. With this ring, it means that potentially 2 of the 3 pairs are pulled into a larger drawdown because one's going bananas. So essentially all 3 in what's called pin action get squeezed. So I'm not because I've seen a lot of the data, you guys, I'm not as much of a fan of trading a ring anymore. So I don't really talk about it. So focus on the pairs that have high win rates in whatever software that you're trading, or has a updated win rate in terms of it working for the respective EA that's trading. And that's why Desan's always changing pairs up on his Friday calls. So why sort of like I can't give away the secret sauce because I don't know what his quant strategy analyzer shot out for the past week or whatever period of time he's back testing, right? So it sort of encourages you to get on his calls. But I probably would look to see in terms of Einstein or Alexander, what pairs have the highest win rates. Now, I have no idea that Jan, if you want, maybe Cameron or O'Neill, guys that are running some of the Einstein rooms, would be able to tell you that. I don't know the answer to that question. But for me, it really just boils down to what win rates are the highest over whatever period of time you're measuring. I'd want to see at least a couple of weeks. That way you're sort of trading the momentum that's in terms of win rate. But the rest of the question, this is actually a pretty insightful question, is with this ring, it means potentially 2 of the 3 pairs are pulled in larger drawdown. Yes. Both go into a bigger drawdown. What are your thoughts on that? What's the advantage of ring versus head? The only advantage that I see in any of this is just trading stuff that is related to high win rates. It's that simple. Euro GBP, let's take a look at that daily chart first. Now notice this is the exact inverse, if you will, of some of the other charts I was showing you, right? So Euro's weakness, obviously related to strength, and then just an absolute, like a size up, what they call day, in terms of volatility. Let's see if I can show this here better. This may not be the easiest thing to see. Yeah, it looks good. I like Marwer. So anytime you have a hammer reversal, this is a sloppy one at best, but the point is that it came down into an area was significantly rejected. Ideally, you want to see this on higher volume, okay? And then we know the next day is going to be a big other way. When I see this on a daily chart, on a weekly, it's hard to see on a weekly, but on a daily chart, I rarely step in front of the big up move that comes the next day. Does that make sense? I just wouldn't be accepting shorts. And obviously, you know, MAV versions of these software, you guys, are available to everybody globally, I think. Correct me if I'm wrong on that. So you have the ability to be the person that decides to whether take the trade or not. Let's take a look at the weekly on this dog. So again, gotta love these squeeze zones that Descent built, right? Because even though it got rejected and had a big move, and you probably have to drop down to a 4-hour to really see the magnitude of this rip back up. Rejected pretty big. See the higher volumes that came in on the 4-hour on this, which really set the stage for just a big lift. If necessary, you know, move to a smaller time frame. I don't know that I'd get down to, you know, but maybe a 4-hour or a 1-hour. Why do I not have these marked, by the way? Let's make sure we put these on the list. So you can get down to like a 1-hour on this and see this big rejection with this huge vol. This is usually the bottom of the movement. Okay. So we came back down around. It's a little easier to see with a 1-hour chart, but we came back down around it. Ideally, you'd want to see for true is for it to maybe test this low again, like we'd want to see in the futures markets, and then spend some time basing with increasing volume as you lift out of it, right? It's more of a tradable bottom in terms of getting long into anything in this particular case. The EB. All right, back to daily on this dog. So where do we go from here? Let's take a look at weekly. I mean, this point needs to hold, or we're going back down to test this area. You guys can see how big this area is, right? This was a really big area that was being defended by whoever or whomever for a period of time. And then we blew through it with big vol. See that? So usually when you see that, this is a hard support area. Somebody was defending it. Somebody came back in to defend this level again, meaning that it was dropping into this, probably had some, you know, if they even had what they call tick chart spikes, which use something that's a lot more procurable on trading equities, but you probably would have seen just a huge vol spike, and that usually tells you you're at a bottom, in which case you can rally from that point. So I would say probably 85-35 area, somewhere in there. Hard support. We get back down to that area again. We crack through it. Would not be accepting any longs because we're probably going to sail down at some point to the 8,300 area. Would be my just reading the price action here. Standard deviation compared to a pivot level. So standard deviation is really just a measure of a rubber band. Hey, let's do some explanations here if I can find the big rubber band. I think my kids took them all. Where are all my rubber bands? Just imagine like you have a rubber band that gets really stretched out, right? What's it going to want to do? It's going to want to snap back. This just basically explains what's called mean reversion. It happens in almost all capital markets, right? The ones that are less liquid or less volume and traded, there's less, you know, sort of likeliness of the expansion of the rubber band, if you will, snapping back, right? But in a really liquid market, something like this currency or, you know, the trading of gold or something like that, you're going to be wanting to be more mean reverting. So if you get to let's call a 1 or a 2 or God forbid a 3 standard deviation level, you're much, much more likely to snap back. When you get into some level like that and you have that huge tick spike, a big vol moment, it's almost like a crescendo moment. I actually is one of the very few times I have no problem stepping in front of the train because I know it's hit its point. Could be wrong, could snap back a whole bunch and then just crash back down through that level, but I'm only looking for that bounce. This morally applies to trade in the futures markets. But if you want to, you can just say in Google standard deviation versus pivot. Pivot levels are usually like fractals, like as you can see on the chart right here, you've got what, 1, 2, 3, 4. This could be a big pivot level over here. A lot of pivot levels are just very simply the previous day's high and low, right? Or a period of, where the volume traded, max vol, like a 70% of the previous day's 5 value area range. All right, so we got that. We answered that. CAD CHF. Did I forget to show that? Let's take a look. Was I forgetful? I feel like this is like exotic currency hour. All right. Let's start with the daily. The daily chart. Ooh, look at that. Gotta love it. Haven't seen this one today. You only look at so many charts, right, before they all start running together. So double check, you're looking at daily. And, obviously we got above this point, came back down and tested the top of this resistance line, and the thing just absolutely took off, in which case I would not have been accepting any shorts. So let's move to the weekly. Not as clear, right? 1, 2, 3. Notice I'm counting the points, right? 1, I guess you'd say arguably 2, 3, 4, 5, 6 points. Makes for a pretty decent resistance level on a weekly chart, right? Carries more weight, bigger candles, more volume, a lot more participants in the market defending that level until they didn't defend it, which usually means the person stepping up or the organization or institution stepping up in this area is more than likely going to defend it when it comes back to that area again, right? So just think of this as like a defense in a fort. It's always the way it was explained to me when I was learning technical analysis back in 2003 by the big Goldman guys that taught me in all of these levels here. So probably going to see, I think if we stay below this line, I'd be okay with, more automated versions of the MAV software. I'd be okay with it trading, but we get back up above this level again in this pair. And keep in mind, a lot of what I don't talk about is what I don't have knowledge on. And that's what the win rates are in these currency pairs, right? I'm leaving that up to developers because I only have so much time in the month to go into all this. But that is my analysis of the daily and weekly on it. What else? Gold for the question I got. There's the big break of gold. Line in the sand was 66. If you wanted to look at the spot on this one, essentially it was 1800 in my opinion. We cracked through it, running some stops. You watch a lot of people be selling their positions up here, right? If we get any inflationary whiffs by the marketplace, we'll be back up inside this range again, would be my suspicion. Let's see what else. Trade in per your comments on the yeah, Tom, I don't know the answer to that. That's a question for Nathan. All right, let me just, there's like a whole bunch of stuff in here. Hang on a second. I'm trying to get it all right. Yeah, for some of the questions I've been getting related to results, there's a lot of people that have got verified FX book accounts, guys, that I've seen. I mean, no BS, that have done really well trading variable. Now, obviously, the GBP pairs would have put some pressure on that, and hopefully it wasn't too much. But and that's without the trend settings. So I would think if you guys just learned the trend settings with variable, you're going to be that much more ahead of the game. I'm sort of out of the loop on that, so just take that with a grain of salt. Listen to what Desan says, not me. What are your thoughts on the reliability of daily FX? So I just personally prefer Forex Factory. It's just my own experience. These guys have never screwed up, at least in my experience. The only thing I was suggesting, Grab Arrow, is to stay away from anything GBP related, which I know is going to knock out like damn near a third of the majors, right? But I just personally would stay away from it. The market's telling us that something's coming, right? It doesn't really matter what it is. The market's got a whiff of something brewing. I think we all want this to be done. Hell, most of my trader buddies on different desks around the world are like, man, can we just get this exit from the Euro Yen Union finished so we can get on with it? Everybody wants it done, I think. But the problem is, yeah, that's a good question. I don't know the answer to that, but you can DM me on that if you want, Frank. But let's do Euro AUD. I think I probably forgot to do that. Here we go. Start off with the daily first. Let's move this up into analysis land. There we go. Can't seem to get it all on the screen, right? All right, so daily chart. The weakness of the euro and the strength of the Australian currency, right? So we broke both of these levels, crashed down, got to jump to the weekly on this one. Do a reset. I don't like that reset. Let's try it this way. How many days you guys counting in the past? I count 3, 4, 5, 6, 7, 8, 9. That's a pretty big support level from a weekly perspective. Should have been no surprise we came down to this level and bounced. See the dotted line? This has to hold. I would imagine this is probably a pretty big area. A lot of times, heck, I'm going all the way back to the end of 2018 to analyze this, right? The problem with when you're looking back on weekly or certainly even monthly charts, the only thing you can really do is look to see where price was either rejected and reversed or crashed through, right? What we don't know and we can't know in technical analysis is what big marketplace participants, right? These are hedge funds, sovereign wealth funds, they're endowments, right? They're anything big, mutual funds, ETFs. What we can't know is how many big players are going to step up and defend an area, right? Now we can know that short term. That's the beauty of trading, something like the futures market short term, because we have an aggregated volume. We can see what big players are defending any particular area, right? And the order flow that's related to that is what gives us a big heads up and makes it a much more predictable trade, in my opinion, than trading Forex. But I'm skewed towards the futures markets. Don't hate me for that. But you can use a lot of the analysis on of those types of movements, because all you care about is what's called OTF players, and that stands for other time frame players, meaning that big institutions, and who really cares what the amalgamation of this group is, right? It's essentially just an aggregate of big players. All we care about is if they're going to help us push through an area or if they're going to defend it. And the answer to that question will help us a tremendous amount with risk management, which is really the bottom line when it comes to these big areas, especially since I have completely gotten on the boat of having an Arrow subscription, right? Because I really think it does everybody a big justice of sort of forcing them, to get into the habit of learning technical analysis. And I don't care if you do a super deep dive in technical analysis, or at least if you have a very broad perspective from just a high level overview. It doesn't really matter how detailed, you at least have an idea. And my son, who we joke, he's pretty much almost ready for trading at 13. He understands all this stuff. So if I could teach it to him, even though he's a math whiz, I'm pretty sure it can be taught to anybody, right? So, of course, I guess it doesn't say much for my son's intellect, huh? But he's in all his compact classes and he's killing it. In any case, no, my daughter has not. She has the permit, so she's passed tests. She's in the process of going through driver's ed, which is a bit concerning because the driver's ed car is a complete piece of shit and it has broken turn signals on it and it's junk. So I made the driver's ed employee take her around in this little BMW we got her. So much safer. But thank you for asking. All right, so we did that. Let me just double check all this. What do you think we're gonna... So, I've gotten a lot of Bitcoin requests. Really all we can do is look at the charts, guys. All right. But this is a long term on Bitcoin. So I've had friends, clients, two of my partners in our new endeavor, which I'll tell you guys about here in the next couple of months, ask me, should we buy Bitcoin? So from a long-term perspective, here's the chart. So you tell me whether you think you should be a buyer up here. If you're a Michael J. Burry, and keep in mind that's Dr. Burry, the guy is an absolute genius. He's also worth about $100 million that he made off of those trades related to that. So the proof is in the pudding. But unlike a lot of hedge fund guys, he give a rat's ass about wealth. So he shut his fund down and returned all the capital to his investors. And now he just occasionally posts on Twitter and then he deletes the tweets a day later, which is crazy. So you either get them because they're going away. It's almost like a will self-destruct in 5 seconds type of tweet, which is absolutely this guy's MO, and I love it. But I wouldn't be a buyer up here personally. Where it is, just go to the daily chart. That was a weekly, obviously. You can see where the support and resistance points lie, right around 40K a coin, right? For a coin that arguably is completely worthless. But again, I can be, you can certainly put me in the category of the old Wall Street, washed up, salty dogs that just don't believe in the long-term viability of these coins, right? And then you have the Elon Musks on the opposite side that will argue this, but I will throw the caveat out that I just don't know, right? If I'm going to invest in this area, and I've made, I don't know, probably 3 or 4 times my money on Bitcoin, but it was on a very small multi-$1,000 position, not really a big deal in the grand scheme of things. Yeah, it's cool. I made some money on it, but I just would never put large cash in this. And I don't care if it goes to $500,000. I really don't, because there's plenty of places to make money in the marketplace, right? And I'm going to talk a lot about this, but I thought I don't know where it is. I'm not going to try and find it, but maybe if I do, I'll post it on Telegram later today. It was really just to chat about how hot money is chasing this. And if you look at most of the stuff I retweet, it's just insight from thought leaders out there that in many cases run big money and are exceptionally generous with their time when they really don't have to be like a Michael Burry, right? And most of them are just like, we haven't seen anything like this ever. The mania, the ridiculous levels that much of the stuff's been pushed up to, like a COS or a GameStop or an AMC, which is just a crappy theater line, or any of the stuff that's related to any of that. It's all just pushed up on speculative bubble stuff. It's not based on any core research. And it, just like Dr. Barry said, they will come crashing back down to earth at some point. So sorry if I bursted your bubble on the coin. I just, maybe I'd be a buyer if it got down here to 30. We'd have to spend some time here, in my opinion, do what's called basing. Maybe I'd throw a couple grand at it, right? Fully expecting that to go poof, right? So it's just like risk capital only, right? It's the same kind of money you'd take to a casino. And I live next to one of the biggest resorts in all of SoCal. It's called Pechanga. And I constantly get questions about the casino. Been in there 3 times. 8 years in the air, I've been in there 3 times, and mostly it's just been related to friends that were out of town. But because your odds are just not victorious in a casino. It's fun to go drop quarters in it, right? But if you're just going to spend a couple $100 at a casino, I'd rather go out to the marketplace and buy Bitcoin, right? Statistical odds. All right. Coming up. Shit, I've been sitting here an hour, huh? All right. Let's see. USDJ is a uptrend channel. That's one. Uptrend channel. An uptrend channel formed right here. See if I can draw it. We are now in a uptrend. My sloppy drawing here. There's your channel. I'll probably adjust this down a little bit. There's your channel. Yes, we are in an uptrend. In this particular, I'm going to blow your guys' heads off. I apologize. But in this particular case, on this chart, I'm not going to get into it with you guys, but I would draw an Andrews pitchfork from the bottom. Remember, a pitchfork, 3 points, and then it draws a fork along this. And who knows, it could be ride the bottom 2 prongs of the fork. It could ride the whole center point. But I would assume, I don't really have time to play around with this right now. But you're drawing one. So I always want the bottom point for the fork. You got to choose 3 points for the fork. And then maybe it would be nah, you probably wouldn't want to use those points. But that's kind of how you get my idea, I hope. I don't like that. Bad fork. I could talk more about this, but essentially you want the most bottom point, and you want 3 bounces, which you're gonna, or 2 bounce points you're gonna have to sort of play around with in order to draw a fork. But the trend channel for now. Sorry, I've confused everybody. What else do I want to talk about here? Oil. Probably coming back down a little bit. Miners. Notice the new low in miners. Weekly chart. I just have to reset the scale on this, right? Big area of support for miners, guys. Anybody that's a big miner person. Told a lot of clients to sell this thing way up near the top, and 2 of them didn't listen to me. Now they're about 100 grand poor because of it. Anyway, you can only do so much. So I wish everybody a great weekend. Join the Variable Traders chat, where it looks like the fun is heating up. Look at that. Lots of good stuff to be had in here. I wish everybody a good trading week, and everybody be safe, happy, healthy, party hard. And I will see y'all on Tuesday. Be well.